Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, and I am on the line with Sean Udall of the Tech Stock Strategist. He joins us to discuss earnings, especially in technology stocks. Well, Sean, you're just about 2 for 2 here with the Google and the Apple. I haven't been following all your calls, but riding a good winning streak, huh?
Yeah, I tend to like earnings season. In fact, part of my strategy is to actually focus on earnings season. And unlike a lot of people that that actually don't like to either hold things through earnings or make guesses and stuff, that tends to be where I make most of my money during the quarter. And as you know, it's when you have the most volatility, so the payoff is the highest if you get things right.
Before we go into individual issues here, I know you're a mathematics guy and you go out and you figure out the earnings and stuff, and we don't want you to give away your secret sauce, but how the heck do you do that?
Well, it's a little different for each company. I mean, some companies you can kind of do kind of traditional, just sort of hardcore look at the metrics and sort of kind of see channel checks. Other stuff, I think some people kind of just have a knack, other people don't. I tend to have a good read or a good feel about what sorts of disruptive technology is probably going to stick. And maybe that comes down to years and years ago, I was involved with the very first what was called multi-dimensional database packages. So I probably got a training early on to start thinking, 1 to 2 years ahead. And if you get a piece of technology that's truly breathtakingly amazing, and let's say you look at something and go, God, how did I ever do my job before this? If it's that good, you kind of know it's going to get disruptive traction. But then, a lot of things, then you have to look at the company. And, does the company have a good management team? Is there execution? We could literally have a 2-hour-long conversation about this and barely touch the surface.
Okay.
It's a hard-fought skill, and some people, I think, have a better knack than others. But there's a lot of work, but some people have a pretty good feel, a pretty good knack. I mean, I kind of hit these things about several different directions.
Okay, and then I just want to go on just kind of along these lines. We were talking about Apple. You raised your estimates ahead of the street, and you also had a scenario for even higher numbers than they delivered. But one thing you talked about, and I can't think of what the name of the company was, that you saw good earnings from them, and you thought that might be related to Apple. What was that?
Oh, sure.
Skyworks or something?
Yeah, I mean, by the way, that's a great tell. I mean, so Skyworks was a huge tell. But there were others. There were others before. Micron was a really good read-through to Apple. That was probably 6 to 8 weeks before they reported. Skyworks was, though, anybody, after seeing the Skyworks earnings report, nobody really should have had any doubts about Apple at that point, because Samsung is just getting obliterated, and that's a big customer of Skyworks. And there's other things in Skyworks food chain that's not that great. And the fact that they beat and they guided so good pretty much showed you that the strength of Apple was going to be incredible. But there were plenty of other signs before then. But that was sort of the last. I kind of called that the last nail in the coffin.
Okay, all right, let's move on to Twitter. And this is a stock that you and I have been talking about now for a couple months, and you've been taking the heat here when it goes down into the mid-30s. They came out with some good news yesterday. Now, Dennis and I are going back and forth, a little contrarian thinking. The whole street now is loving this. Now it's back over $40. First of all, what's your opinion on the news that was delivered yesterday? And was that something you saw coming in their wheelhouse or not?
Well, first of all, yeah, I definitely saw stuff like that coming. I think they're going to have they could have hundreds of deals like that. I mean, it's not. That's exactly the type of stuff they can sell into. But if you go back, let's back up just a second. I mean, I think if you think about Twitter, I think you and I are going to be talking about Twitter for half a decade to a decade. So first of all, they're set up to possibly be maybe one of the more powerful media companies the world has ever seen. I think if In fact, you can make an argument right now. They already are from sort of a distribution of content standpoint. But as far as like the quarter, you also hit on a super important thing. I would actually like it if sentiment was poor to really negative, and actually sentiment was accelerating to the negative in the quarter. So when you feel like you have an edge, you actually want people to be against you as firmly as they can be. So I'm not that crazy. To me, it kind of incrementally hurts the setup if things get too bullish in front of it.
Okay.
On the other hand, though, sometimes the joke I use is the fix is in, right? Sometimes things become so obvious that a few smart analysts jump on it ahead of the quarter. You know, there was an Apple quarter like this. It was either last April or last October where it was just sort of so obvious. Everybody was running up numbers, and there was a fair amount of enthusiasm, but they still just totally crushed it. Now, by the way, Twitter, I'm not saying Twitter is going to crush the quarter, but I do think the odds stack up that, in fact, I think I said this the last time on the show with you, I think either this quarter or next quarter is probably the breakout quarter for Twitter. And if I'm right on that, it might not matter, because if it is the next quarter and this quarter's okay, people will sniff it out anyway, right? So I kind of think the fix is in. I think people are starting to figure out that it's really dangerous to be short in Twitter now. I think people are starting to figure out maybe this skepticism in this whole issue with MAUs is just as ludicrous as it is, given the fact that the company has done, literally they haven't missed a quarter. They're kind of like a Ring Central. They've never missed a quarter. They've beat expectations every single quarter. In fact, you can't find a company of Twitter size, I'm not sure that's ever delivered 4 quarters in a row as a public company of over 100%. So frankly, it's just the kind of the negativity on Twitter has a couple times reached lunatic epic proportions. And so all they basically have to do is kind of deliver, I think, just a moderate beat. And I think the game is afoot. I think the fix is in. I think the big pair trade, which was long Facebook, short Twitter, could be breaking. And, there's a lot of factors that basically point to a Twitter that can go up. Now, that all assumes one thing, that they don't horribly miss the quarter. There's always a possibility a company can surprise you, right? I mean, none of us know everything all the time. There's no way to. And just the odds of trading, bad things happen. So, there's probably a 10 or 15% chance that they miss the quarter. That can always happen. But I think things line up pretty good. I would rather see sentiment be negative like it was. I'd rather see the stock come into the quarter between 36.5 and 38, frankly, than between whatever it's going to be between 40. And I actually think they might run it up to be 42, 43 before the print. So, but it looks a lot like, there was a really good analyst on the other day. He said it looks and feels a lot like a Facebook quarter before they broke out. He could be right about that. Like I say, this could be one of these things where people have been negative too long at a time. It's almost like maybe they don't even have to have as good of a quarter as they've had, and the stock might go up anyway. We'll see what happens. But I think this is a stock that's going to shock people in the next 1 to 2 years to the upside.
Okay. All right. And just real quickly, how do you play? Do you play the stock? Do you play the options? Do you play the leaps? Or a whole variety of that?
Yeah, I kind of do a little bit of everything, kind of depending on price. I do like to do a fair amount of option trades, but I'm pretty picky on option pricing. So if I feel like vol's too high and option prices are too high, and the option market is trying to extract way too much money from me to be long options, I'll try to think of, okay, how can I structure an option trade that I'm getting paid on, where maybe I'm, whether it's a short put spread,
Gotcha. Yep.
long call spread. So it's just something that's cheap enough to play. But in most of my most convicted positions, I focus a lot on just holding common, and then using common and putting option trades. I find you can be a lot more effective with option strategies if you put options around common stock. I think a lot of other pros would kind of agree with that.
Okay, let's talk about some companies that reported today, and Tableau Software Data. Give us a take on the numbers.
Yeah, I'm pretty sure. I'm just double checking. I'm pretty sure they report tonight. That's
tonight.
One. I think. Yeah, tonight. I think they're going to have not as good of a report. They have been one of these blowout, 80%, 75, 80, 85% growers. By the way, that's 20 to 25 to 30% below Twitter. I'll just mention that briefly. But anyway, so Data has been one of these where they have gotten rewarded for actually doing 70 to 85% growth year over year. The stock has been real strong. I don't think they're going to beat by as much, but I think they're going to have another really good quarter. This is a strong contingent. The Data, Splunk, Varonis. Varonis was a huge winner for me last year. So this big data application, business intelligence space. I think pretty much every company in the business intelligence, big data space probably has good odds of having a real strong kind of beat and raise or beat and meet quarter. This quarter, and Data is one of them. Ring Central reported last night. Everything I see, numbers look really good. It's kind of a funky stock. I'm not sure how it's going to trade today. Sometime this is one of these stocks that literally has never missed a quarter. And the stock has gone from the IPO high of 20, 23, 24 as low as 10. And they've really never really had bad news. So this is another where the smart money might be starting to like this a little bit more. All the lockup expiry stuff is gone. Kind of all the dynamics that hurt IPOs in their first year of trading are basically past them. So I think good numbers can start being rewarded now. So they had a good one. If there's any other ones, fire away. Any other reports?
Okay, a stock that people love to talk about, GoPro. What's your take on GoPro?
There again, so I got long GoPro around 50, and I probably pressed the trade a little bit lower, maybe between 47 and 49. Can't remember exactly where I've traded it a bunch of times actually pre-earnings. So this is one I'm taking a small bet in. It's kind of a calculated risk. Here again, this is one I think the negativity got pretty ridiculous. They could have a shockingly good quarter. If there's another company this quarter that produces anything sort of like the Apple quarter, it might be GoPro. And it's another one too. If you look out a full year and you look at the full year number for GoPro, analysts don't expect that much growth. I mean, I literally think full year numbers could be anywhere from like 10 to 20% light on GoPro. And again, this is a stock that has just been annihilated and tortured from things like lockup expiries and, they can't become a media company and they're never going to hit another good product. Kind of that negativity, that weird negativity you see on Apple sometimes that doesn't make any sense. I'm not saying I love GoPro, but I definitely, at 50 and below, I'm like, hey, I'm going to take a shot. I'm going to ride this thing into the earnings report. Now, this one I might exit or I might keep. I'm not sure. At 58, I got a pretty tasty, I'd have a pretty tasty return in a very short period of time. And it'd be hard not to take most of that trade off before they report. But I think if there's a company that could produce like an Apple-like shocker to the upside, it could be GoPro. Now, here again, if they don't beat, the stock is going to get tortured again. But, this is one of these, probably 85% chance of a great quarter, good quarter, 15, 20% chance of, of a miss or something like that.
Okay, we'll keep an eye on that. Quick thoughts on, not sure if you cover these or not, VEEV. Any thoughts on that?
Did you say VEEV? That's VEEV?
Yes.
If you're talking Viva Systems, I do cover that. I've been in that stock before. My favorite play on that was a while ago, kind of after the spring tech massacre. I bought some of this and made a pretty good gain on it. Right now, here again, if it was 5 points lower, I'd probably feel a lot better about it. But this is one now, if you look at this on a technical basis, they're not too many points away from clearing kind of a key technical level, kind of 32, 33-ish. And, this thing could be a nice technical play. So here again, I think the report sets up pretty well. I don't think they report for quite a while, but that is one I probably like more on a technical basis. I think the earnings report is probably 3 or 4 weeks away.
Okay, and one more for you from Rob Hood, OMCL.
I don't know that one, or I should say I don't cover it. No value add can I provide there.
Okay, I would appreciate your honesty. So, all right, Sean, we're just into the market open here, and I know you're not really a day trader. You're more of a a longer term, intermediate term trader, swing trader. Finally the liquidity comes here at 9:30. We're actually at 9:32
Sure.
here. Just kind of like if we were in front of your screen right now, like I'm sure we see a lot of green there, but just tell me, what you're looking at. If you have some key levels and some stocks, if something you're watching, you're a little bit nervous about on the long side, or looking to add to, or potential short out there. Give us a look.
Yeah. So okay. So yeah, that's a great question, especially for today. So one of my themes has been. So I do believe the market can go quite a bit higher this year, surprisingly. I think I've talked about kind of my 1998, 1999 potential thesis. David Tepper echoed it not too long ago. So I'm kind of looking at, like, everybody got all embroiled in this, the dollar is strong, it's going to kill everything thesis, right? Well, if you go back and you look at the earnings reports, it doesn't look like that. So what am I looking at? I mean, Ring didn't mention or didn't gripe about currency risk. They're up a little bit. They had a great report. A stock called Silicon Labs, which is sort of a small semiconductor. They're up 5% right now. That's a name I'm kind of watching.
What's the symbol on that one? Symbol?
Slab, SLAB.
Never heard of that one.
Yeah, they actually reported this morning. Good report. The guide looks good. Interesting company. I might actually go long this on an extension trade. We'll see. I got to watch it sometimes I like to watch these things for 15 to 20 minutes. But I'm looking at 3D printers today because.
Wait, what's an extension? What's an extension trade?
Extension trade would be sort of like an earnings trade that's gapping up, and then sometimes they come in, they try to hit on a little bit, but basically if they sort of hold the 2, 3, 4-day high, something like that. Different people use 2-day highs, some people use weekly highs. It's kind of whatever your flavor, but basically if they break, a 2-day high, a pre-market high, the volume's really good, and, it looks like it's going to keep firing to the upside. By the way, they work on, like, Gilead could be an extension trade for the downside. They had a great quarter, but the guide wasn't so hot. Biotech's probably in a bubble. At least I think biotech's in a total bubble. The market might choose to start going after biotech and sort of reallocating money from biotech to other things. So, this is one where, I don't know how low Gilead could go. So it just depends, in fact, Gilead was a trade. It was an extension trade short right at about 101, 102. So it broke 101, 102 the downside, and, somebody that did that trade is now up, 5 to 7 points. So that's a good little example of one of the things that work. But, I'm watching Twitter. I think Twitter might fire up and be strong all the way into their print. So I'm watching that. I might do, I don't day trade per se, but I do trade every day. So most of my trades, I definitely like to keep trades longer than a day. Sometimes I do intraday trading. Usually my preferred time frame is about 2 to 6 weeks. Yeah, or a year or more. I mean, but sometimes I'll trade in hours to days. And then I'll be watching data, I'm almost positive they do report tonight. So I'm like, watching that into the print. So, I just have, like anybody else, I have anywhere from 50 to 100 stocks on my screen. And, I'm kind of trying to dissect and figure out the market. Now, there's also another interesting little, I've written extensively that Apple might finally get into search. There was an article on that. So I'm kind of seeing that's really more, it's not really that bullish on Apple short term, but I'm kind of watching to see if Google cracks. I am long some Google right now. I don't really want a whole lot of search talk while I'm in this trade. I'd like to get Google to about 540 and then get out of it.
You had a shot there. You had a shot at 540, Sean. You had a couple
what
shots.
Was that?
You had a shot at 540. We were talking about that trading range. You had a shot there on earnings day, and then it got back up.
I did. I didn't take it, But by the way, I'm actually in a spread trade that maxes out at 540. So this is one of those I'm in. You probably know about these butterflies, right? So
Yep.
you're long a contract, and you're short 2 contracts, then you're long another contract higher up. So at 540, let's say 540, 545, I'm a real happy dude on Google. If it goes way above 540, 545, I start giving gains back. And if it's way below 540, I don't do that money. So by the way, I entered that before they reported. So the trade looks pretty good right now because the stock was, 510 or below when I put that on. So I made a good, correct directional call. And now I just kind of got to wait for the payoff.
You talk about the print, and by that you're meaning, when the actual number comes out. Will you Will you act on that print? Will you have orders out there to take advantage of a good or bad number, or do you just let them just battle it out in the pre-market trading, and then once the true liquidity comes in at 9:30, you go to work?
It depends. I mean, I definitely do a fair amount of after hours and pre-market trading, but I'm more selective, because, I mean, the algos are very smart, and there's a lot of times you'll get a really good report. I mean, ServiceNow, here's a great example. ServiceNow had a crushingly good quarter. Ticker symbol is NOW.
Okay.
So they had a really good quarter. Stock spiked up. Now, if you were trying to chase this, you got killed because, well, probably not killed, but you're probably down, 1.5 to 2 points, and you probably got stopped out because the stock from the pre-market high to the intraday low was probably 6 points. So, the algos are very good at kind of, knowing where to attack and knowing where people's pain points are. So some stocks that are really super, like Amazon and Netflix, they almost didn't pull back at all. They just ripped up and kept going, right? But these mid cap stocks, you got to tread a little more carefully. They can deliver everything in the world for you. You think, oh my God, the stock should be up, 15, 20, 30%, and somehow they take a thing negative intraday, right? So, yeah, you just never know what's going to happen. I mean, Chipotle is a good, this is not sort of in my tech wheelhouse, but, I know the company and I know the story and I know how it trades. Last night, I mean, the numbers to me look like a raging short, but at one point last night, Chipotle bounced $20 because I think they said something like, we might raise prices on steak. And the stock went from wherever it was post, an after hours trading, had a 20-point move. It's quite a bit below that now, but if somebody was trying to trade that last night and they were short, I'd have a hard time believing they did get stopped out on a 20-point move higher, or they could have unless they have a strong stomach to stay in there. But yeah, so it's knowing the stocks, knowing the nuances, knowing how things trade. But for me, a lot of it's price. I mean, if I really like something, look, let's just say Ring. Now Ring is up, but if for some reason Ring would have been down $1 this morning, I wouldn't have cared. I would have just bought some. And then if it would have been down another 50 or 70 cents or $1, I would have bought more because I know the quarter, I know the company, I know the results, I know they crushed everything. And so for some stupid, weird reason, they were killing the stock, I would have been a buyer. And so I wouldn't be really worried about watching it trade. I would just say, hey, here's a price point I like. I'm gonna grab it.
Sean, I got to jump in here real quick. We do have a question coming out of the chat. Rob Hood wants to know, when you were talking about it's Calyx, what do you mean by material resistance?
Well, I'm not sure I was talking about Calyx, but Calyx reported. Now, they had a good report, but I think the guide was a little squishy. So that's probably more of a term he uses than me. But material resistance would just be a price point or a price level that the stock's having a hard time getting through. And once that point breaks, so I'm not an expert on Calyx, although it is in my tech space, but if a stock breaks that point, then it becomes there would be another case of an extension trade, right? If whatever the material resistance on the upside or the downside for any particular stock is a point, and once that point breaks, that's another great area for an extension trade. But yeah, I think it's as simple as that. It's just whatever a key level on a stock, and then you just have to pick your direction, either higher or lower. In this case, Calyx, I don't know exactly what he's referring to here. He might be thinking that maybe 10 or 950 was the material resistance point, and the stock broke through to the downside. But if there were other names too, it just depends. Everybody has their different levels on those points.
Okay, all right. We're on the line with Sean Udall. He's the tech stock strategist, sharing his insights, opinions, and hard work on the tech sector. Sean, great conversation with you, and we're going to have you on again real soon.
Thanks so much, Sean.
Sounds good. Take care, guys.